Jones as you can just add them. All right. Well, it's wonderful to have everyone here. So let me start with this. I think last 5-6 weeks, we've seen things we've never seen. And there's a quote, I think Vladimir Lenin said this. It says, there are decades when nothing happens and weeks when decades happen. And I think you can testify these are the type of the things that we would have seen in Twilight Zone, which, by the way, was one of my favorite childhood, actually my parents' childhood favorite shows. And here I am, I think I'm reliving that. And like Twilight Zone, you don't know what happens till the end. There's just so much is happening. And this is the time that we're living. What is happening with all the, when we look at history, and most of you know me, I am a big student of history, and I believe history does repeat itself. When we go back, I don't think we've ever seen like this, and I think in decades to come, generations to come, they're going to write about the time that we went through. And I won't be surprised in a couple of years, we'll have movies made about this. With that in mind, today I'm going to do a little differently than what I usually do as far as our presentations. One thing I want to emphasize this week is going to talk about the psychology, and I put it psychology, biology, risk management. And there's a news with the Bitcoin halving this coming week on Monday. I thought it might not be a bad idea to look at something, an alternative investment, which is the cryptocurrency, and Bitcoin give you a little tool, at least to have opening the door so you can investigate yourself as far as understanding what it is. Again, in 1.5 hours is a lot of material, and my whole goal is just to open some doors, give you some foundation. And I believe there's nothing in life, it's not a better drug than confidence. And once we feel comfortable, I think, once we do things, that's the best lessons. I mean, we can read and study as much as we want. I know people have studied for 50 years and still haven't done anything. So my hope is to give you some tools and give you that freedom to explore things, give you the foundation so you become your own, really, money manager, investor, but also be your own person in some ways. So this week we're going to go to cryptocurrencies. Then we will discuss the markets, and I'll answer some questions about the markets of the week. I put down 3 questions. We will talk about the trade of the week. Every week I like to share some of the things that I've done in the past, just one, and use it, why I did it. And then every week I like to go over the technical indicator of the week, that it comes from like the free side, so you can investigate it more. But these are the indicators that I found useful for my trading. They have saved me time and given me some clarity. And the last but not least, I like to give you some ideas for the investing for the future, and I call it them, especially don't want to give you stock. I'm not, because I just want to give you some ideas so you can explore yourself. And again, this is being more of this is an educational webinar, so it's not like an investment advisory. So you can follow on your own. I found, you know, mentioned with all the education, as far as we learn, it is really the psychology, and I will go even deeper, is our biology, which dictates our decisions. When you go back to the caveman's time, when we had our, I call it, you know, basically our alligator brain, there was the fear and flight, the 4 F's. That still has stayed with us. We still go back to those instincts. So today I thought, let's talk about that, because regardless of how much you learn, how many tools, if you don't control, I call it EQ, which is emotional intelligence, the other things are not gonna be as useful as they should. So believe it or not, again, it's the biology which dictates our psychology, which dictates our decision making. So the cavemen historically, they took chances, they were hopeful, and that's what they got out of the cave. They went hunting, they did whatever they thought they will get somewhere. And we as humans, we are hopeful people or hopeful creatures. And based on that, the decisions that we make in life is very much sometimes similar to gambling, because just imagine the caveman goes out hunting. It's gambling because, could have stayed in the cave, but no, we go and took chances, died, but also hunted to survive. And I bring it back to today. We do have developed our cortex, which is the new cortex, which gives us the decision making, and I relate that to IQ. Our upbringings, the hang-ups we have, the rewards we got, the phobias we got, the disciplines we got, all of those have made the patterns in our lives to make the decisions. And when I translate that to our investing decision making, I want to take one step further and see how the casinos work. Casinos have survived all these years because of our gambling, and that I mentioned about the biology, not even the psychology. We are historically gambling creatures. And because we all feel positive, we start doing things based on that. And although we all think we are fair in our decision making, when you ask most people about their success, most students, when they ask them, how did you do on your test? 80% say, oh, we did better than average. Well, average by itself, that really means half, right? So it's funny how most of us, we feel that we know more, we know better, we are better than average, but historically it's a 50-50. It's like tossing a coin. And again, the insurance company know about this, the casinos know about this, and that's why they lure you in. And that's why people who go, we have a dream of becoming multi-millionaires. And this is where I think it's very important. And I know Martin and I, we've discussed this in the past, and he knows my feeling about, I think there's too much emphasis on IQ, which is intelligence quotient, and less emphasis on emotional intelligence, which is EQ. It's important to have that IQ. And here I'm trying to give you the tools, which is basically, learning, using our brain, but majority of our success comes from our emotional side. It's almost like a cyber. It's almost like iceberg that you see the tip of the iceberg, and that's the IQ. But what is in the bottom, that's the emotional side. And that's where you need to master. If you want to be a successful investor, especially some of our younger people who are in our audiences, you have to really dig deep about yourself. It's about your decision making, where it's come from, where are your fears, what is your, is there any overconfidence, what are some biases? And we will talk when I analyze this about, we talk about the markets, and this is, I didn't put this down, but maybe term of the week should be confirmation bias. We like to, the biases that we like to choose the things that confirms our decisions. So it could be 10 factors. And if I'm buying this, if the market's going up, I'm looking at, well, these are the reasons. And they ignore the other reasons because that justifies our decisions. It could be in dating, it could be in marriage, it could be in relationships, it could be in business decisions. So that's why again, these are just opening the doors to just tell you that emotional intelligence, in my opinion, is more important than intelligence quotient or IQ. So this is something that we can work on, but the best teacher will be yourself. Again, you need some really honest sitting by yourself. And that's what meditations, and that's why when we talk about spirituality, I truly believe in this spirituality, in searching your soul. And I believe that gives you a lot better guidance than just learning the techniques. And I'm hoping, I'm trying to give you the techniques. Hopefully they kind of save you time, but it's all about you. So with that in mind, I'd like to take it to the next step is that's where, you can have all the hints in the world. You can have the best stocks that you found. But the most important thing in investment management in portfolio is that it's the money management or risk management. You have to know when to get in, but the most important is when to get out. And the most successful traders are the ones who have faced losing. It's not about ego. They understand simply that they can have a long career if they stayed in the business by cutting their losses small. And this goes back to, again, the casino. A lot of people go in there and they gamble and gamble and gamble because the ultimate goal is to make millions, while the casino is collecting a small amount from everyone, and they lure them in to even do more and more because they know that human belief. And that's why if I can share this little simple money management, I think this will go a long way. So let's assume you have a very small account or a large account. So it doesn't matter, let's say it's $10,000, which this is 10,000 by the way. Sorry, I put one extra zero. Hopefully after investing with us in the next few weeks, that will be extra zero in front of your account size. But anyway, this is $10,000. In investing, we recommend, we do not want to put risk more than 2% of our capital in any given holding. So let's say if you want to buy stock, basically, if you have a $10,000, you don't want to risk more than $200. So right now, you have a known factor that basically, if I had 100,000, then I would not put 2,000. Sometimes even in 1,000, you put 1%. So this allows you to have a longevity at least, because you have to have 50 losing streak in a row to lose all your account. And in this case, which is very, very, very unusual, you should be very unlucky. But anyway, this allows you to take the trades and knowing that, okay, I have another day to do another trade. Last week, we talked about the average true range, which is ATR, which basically what it was a movement of that holding, could be stocks or any type of commodities, for the past 14 days. They looked at the high and low, and there's a formula, but they look at that range. What was that range for the past 14 days? They use that and they say, well, this stock, if it's at $10, it can go up. If its ATR is 1, it will go up either to 11 or 9. So right now, you know it can move up $1 up or $1 down. And again, because we talk about risk management, in this case, we want to go outside that, and that's where the Keltner channels were introduced last time. It allows you to have a criteria. So if you go 2 times that ATR, at least you know this is how much I'm willing the stock to move or the holding to move before I get out. Let's use an example. In the last few weeks, I've talked about an exchange traded fund, which is called UGA, and that's your gasoline. I feel that with the people not flying, most likely not going to hotels, there's going to be more traveling, but the states are opening up. The usage of gas will be higher. And I think I recommended UGA about 6 weeks ago. It was about $9.50. Today, actually Friday, it closed at $15.30. So it's been up about 55%. While the oil, as you know, the drama with the oil, here it is the Reebok gasoline they call. So let's say you're interested, you have that $10,000 account, you're interested in buying this exchange traded fund. You know the price is $15.30. And if you go on Finviz, it will actually tell you on the right side what is the ATR for this. And the ATR as of Friday was $1.12. What that means is you're willing to risk 2 times that $1.12, which is $2.24 for UGA to stay in it. So what that means is if UGA goes to $13.06 below that, then you want to be out of it. So we know our risk. We know we are not going to take more than $200 loss. And we know what is our ATR. So here, once you're deciding to go and buy shares, you just divide the $200 by the amount of the risk that you were going to take. It's just $2.24 per that stock. And in this case, you will buy 89 shares of UGA. So with 89 shares, let's say 90, now you are proud owner of about $1,400 worth of UGA approximately. I'm just using that. So that means you have $8,600 that you could do maybe 3 or 4 other stocks. So again, each holding you don't want to lose more than 2%. So maybe you will do something different. So per your risk assessment, now you could buy 89 shares of UGA. So I think if you know this clarity, and I mentioned the journal, having writings, doing things on your whys is the best thing you can do, better than reading tons of books, watching lots of YouTube channels and videos. And if you know the system, your own system, if you know what is your personality as a risk management, and also what is your goal as far as how much making money is, what your targets, what will make you happy, and what will make you lose sleep at night, that's more important than, again, learning a lot of different kinds of techniques. All right, so that was a brief money management. So this week I thought I would go something different. This is a picture was taken end of November 2017. I was one of the judges in, we had a great competition for some of our university students in California. And what we do, we give them from different universities, they're allowed a different amount of money, and they're supposed to come and present, telling us why the decisions they've made with that portfolio management or the money under management, why they made that decisions, why, you know, from economic point of view to macro to micro, why they own stocks, why they own bonds, why they own commodities. So it was a great event. The reason I'm showing this, one of my co-judges asked me what was my opinion about Bitcoin. At that time, Bitcoin was right around 8,000. And I had been involved, or I did understand or got involved a little bit in 2012. I started studying, that's about 8 years ago, about Bitcoin. I thought it was an interesting concept. And what happened was at that time, I said, you know what, I believe there is validity for the technology, which is called blockchain. But I think Bitcoin has been overheated, but I believe that Bitcoin will go to $20,000 in a matter of 6 months. And that was my prediction, but I said after 6 months, it will come down, it will really come down because there's just a lot of euphoria. This is where I talked about not knowing that within 4 weeks, Bitcoin did go to $19,738 or so. And right after that, it basically dropped all the gains that it had had. And that's when people start saying Bitcoin is just, you know, it's the fashion of the day. It's not, doesn't have validity. But I do believe with the way the world is, I think there is some validity about cryptocurrencies. So let's think about why even today I just wanted to introduce you to cryptocurrencies. As I mentioned, there is something called halving happening in Bitcoin on Monday, May 11th. And you might have heard it on the news, or you've never really had any introduction to Bitcoin or crypto. So I thought this will be a good, the next 10 minutes will be a good educational introduction, especially with what's happening with the COVID-19. And I think this might help you to hopefully understand a little better. And one reason is I went shopping yesterday, I bought some to get some food, and the line that I was in, the cashier says, "We do not accept cash. Do you have card?" So I said yes, but the lady behind me was really upset. She said, I stayed in line and, I'm really upset. I have cash. And anyway, they had to see the manager. But what is cryptocurrency and why we're talking about it? So let's talk about what is money. I mean, in the past, in the history, obviously gold has been a big element as a transfer of value. Grains, shells were used as money for the transfer of value. Cocoa beans, and there's just a few other things that have been used. But basically, it's money. So rather than carrying tons of shells, eventually what we're talking about is the value, exchange for something. So what happens, I offer you something, I give you bread instead you give me eggs. I give you eggs, you give me meat. So basically we're exchanging value, but what money did, money made it like a centralized or a common theme, so we could use that. Then, as you know, changes happen. Gold was the back standard for the money. So it allowed for this governments and the banks, central banks, to issue something, and they had a backing of gold, and eventually that backing became trust. And that brings us to today. What is the trust? Money is like I owe you, a piece of paper, and we have a faith on our government and our central banks that this money is worth what they are saying. So basically that's what has happened so far, and that's what's called fiat money. Again, because it's based on the trust of something. And then we come to Bitcoin. So Bitcoin was really introduced actually in the late 1990s, but the real introduction happened in 2008. There was a Japanese, we don't know who, we don't even know this is a real name, Satoshi Nakamoto. He wrote a paper in 2008, and in 2009 he said that we really don't need the central banks giving us the authority to transfer money or the exchange of money. And he introduced Bitcoin, which is really a peer-to-peer electronic cash system. What it really is, basically just think about exchanging money. Let's say John wants to send money to Martin from UK. The money, he goes to the bank takes that money, and it is a third party. This money goes to a third party. The third party takes a little fees, exchanges it, and the money lands 3 days later, let's say in Martin's account. Now, so basically you have a centralized place and you have two parties. This you don't know, you send it, but the government or the central bank knows exactly who you are, but you don't know who they are. Basically, you just have that faith. And basically this is called centralized, but not transparent exchange of money. So if you don't mind, I'd like to just show you a little video. It might make it a little easier to understand what Bitcoin is. So.
Ramin, can you also share the audio of the video?
Oh, sorry. Let me see. How do I do that?
I think that's a way.
Sorry about that. Okay.
Yeah, we test this, but we didn't test the audio.
Oh, the audio is okay. How do I do that?
Does it have an audio or not?
It does have an audio. Oh, let me. All right, these are called technical. All right, then what I have to do, do you hear it now or no?
No, I think somewhere from this Zoom, we can start to share the computer audio as well when you share screen.
Good God. The joys of, let me stop share mine, and my apologies. Yeah, we didn't. Well, you know what? Rather than wait, I will fix that and then. So let me just then I explain. I'll be the video. Basically, really, what this does, the Bitcoin, is based on a blockchain technology. And what is blockchain? Is really a software. Sean, can you hear me, by the way? Is that
Yes.
okay? So it's really you owning it. This is a technology. It is something that allows you to move, in this case, from one party to another party without any interruption or anything else from the central figures. So really, if in your group there's like 4 people, you do have a ledger. You all see what's going on. If it's like A, B, C, D, there are 4 of you in the group. If Sean sends money to John, John sends money to Chris, Chris sends money to Martin, which is not really, that's what the mining and coins come into picture. In reality, you guys, every one of you have the ledger and you know exactly what happened. So in reality, what happens, Sean can exchange a service or can buy something from Chris, and basically in exchange for the coins, in this case, for instance, he had. And the easiest way would be, this thing has been going on for a long time, and you have ATM, you have PayPal, you have the credit cards, debit cards. These are all digital currencies. So the only difference is these digital still go to the central place. This one allows you to be master of your own destiny. And what happens is the central banks don't have any saying, and because of that, this is transparent, because the banks, they have a ledger, but you don't know. Let's say Wells Fargo, I use that as an example. Wells Fargo, I recall a few years ago, they created these fake accounts. Nobody knew it. This is one of the employees, and some of the employees finally came through, and they found out they made millions of accounts, but because there was no transparency, nobody knew about this. The thing with blockchain technology and the digital currencies or cryptocurrencies is everyone has a ledger and they do know what is happening. And because of that, obviously, there is very low transaction fees. So there's 3 major attractiveness about this is they are, first of all, there's no centralized power. Things are go ahead.
Yeah, Ramin, can you share your screen because now there's nothing there.
Oh.
And when you share your screen, I think there's an option to also share the audio from the computer. If you can see that, you can try to enable that. If not, you can share your screen and just we can continue our seminar.
Okay.
Thank you.
Thank you, Sean. Thanks for keeping me on my. Okay. Oh. Okay. How about now? Can you see this?
Yes.
Oh, sorry about that. But this was just only one. So the blockchain technology. So basically, again, it allows you to have something that is decentralized. It has a ledger, and it allows you, again, at a low cost to freely move things. Let's say you want to buy something from Microsoft. Microsoft accepts your Bitcoin. It goes directly to them. There's no transactions in the middle. And so there's different ways you can really invest in these things. And that's what I think. I will put a link at the end of our presentation for recorders. So I let you, that's what I will do, Sean. Maybe put a link, part of the slides, and everyone can watch it themselves. I don't want to take too much of your time.
Yeah, I think that's a great idea.
Yeah. So basically, this is in a nutshell, Bitcoin versus banks. The Bitcoin is transparent because you know who's the other party, but nobody else knows. You are the one, and the other party knows. So it's not subject to government control. And that's what has been the problem. I mean, there's been problems that the governments don't like this, obviously. But again, this is the Privacy Act, and this allows you to, the second part comes in the picture, with banks is centralized. Again, and also subject to corruptions, is subject to government. Government can put, when you have paper money, for instance, they can come and put limitations on. A few years ago, a couple of years ago, actually, it was Modi came and said, because of the corruption, we are not going to have circulation of the 500 and 1,000 rupees. They want to have the smaller currencies, so they knew how to basically avoid. They said it was because of corruption, so because they were doing counterfeiting and all that. So basically, that's the bottom line. And you can see what has happened last week with Bitcoin. It went just under 10,000. And there's what happens with Bitcoin, it's basically undermining. It is, again, technology. So what happens, a group of people, they're technologically savvy, they come and they write a code finding that what was the transaction happened. When they're the closest to that code, they get rewarded about 12, well, it was 12.5 coins. So they have coins and they get a little rewarded some other ways, lower transactions. So that's where mining comes. Mining comes because of these people use these software codes, which is gotten much more and more efficient now. And because of that, what happens is more people trying to do mining. They want to come up with more Bitcoins. But when Satoshi came with the idea, which was 2000, he said he didn't want to have too many coins because it would have created inflation. So he suggested every 4 years, the number of coins who are going to come to the market, they should be cut in half. And because of that, that's one way of controlling the supply and demand, but also allowing, again, to make sure this doesn't have that inflationary pressure that the fiat money has, because look at what's happening with central banks now, they're just printing money. So this way you have limited supply. So initially, what was happening, they are called blocks. So initially there was 50 coins per block. And then in 2012, they cut it to 25. Now, on the day, and that's the reason I want to talk about this, because Monday is coming, the day that having started, it was, the Bitcoin was $12.35 in a US dollar. 150 days later, it jumped to $127, or more than 10 times. In 2016, on July 19th, we did that again. And this time, remember, there was 25, now it's 12.5. That means when I come up with the code, I will get 12.5 coins rather than 25. The price was $650 in 2016. And then 5 months later, it was at $758. And today, we have 12.5, and as of Monday, it's going to cut to 6.25. And we have about 630,000 coins, and this is happening on May 11th. So I hope, my whole goal is actually just open the door. I don't want to go buy the Bitcoin today, but I just want to give you some alternatives. Now, talking about alternatives, Bitcoin is only one type of cryptocurrencies. There's other alternative coins that they're even more efficient now. They also do halvings. So there's Litecoin, there's Ripple, there's Ethereum, and it has gotten much easier. When I got involved in 2012, Bitcoin was about $32. I couldn't get in, so I had one of my friends who had an in with another one who was writing the code. We had an in with another community leader. So we got few coins then. And it was at 32, and I sold it like at 100, thinking that I'm a genius. But imagine when it hit to 20,000, almost how I felt. Anyway, that's another story talking about psychology. Anyway, so the EQ was out the window, but that was my thing, and I wish I would have held on to it. My friend did, so he's smiling now. But it was very difficult because you have to have a wallet because each one is protected. So each person, you could have it on your computer, you could have it on your mobile, which we don't recommend, but everyone is protecting its code to hold those coins. So basically now it's getting a lot easier. You can actually, if you have an equity account, a lot of brokerage firms now trying to come out. There's a site called Coinbase. You can do exchanges in that, but it's going to get easier in the next few years because I don't believe Bitcoin is a dying breed. It's not something of, as I mentioned, it's just came as a fashion. And I will explain in the next few slides why I think this is going to stay with us for a long time. And again, it's actually the blockchain is the main attraction I think there is. By the way, I just show you the graphs. These lines are exactly when the halving happened. This is 2012. This is 2016. So you can see what happened to the Bitcoin in the consequent weeks and months. All right, talking about emotional quotients. Let's talk about these markets. What is happening? Last week, interesting week. And I'll start with this. I go back to the history. What is going on now? Do you think it's a wound or a scar? Because the wounds do get healed, but the scars stay for a long time. If you speak to people who went to Great Depression, they went to World War II, it's still staying, that thing is with them. Vietnam War, these are the scars. And I believe this is the time. I am a very optimist person. I'm also, most of the time I'm positive, but I'm a realist. And I think what we have seen, we've never seen before. And that's the reason I believe these are scars that it's gonna stay with us for a long time. But at the end, you will see what are my thoughts. I think it's not all is doom and gloom. So as always, I go through, this is again from the Department of Labor, and just give you a little dose of reality, what is happening with our economy. This is United States, by the way, for our friends in UK. You have the similar things. Maybe next week I'll do one for UK if they run one. But the jobless claim, as you know, the good news was it's becoming less and less. But we're going to hit 32 million. That's just the claims. And then I look at the service area, which is the hotel occupancies. I look at what is the average daily rate, what is happening with the revenues. Are the people flying? You look at the airports. Are they ghost town? Even after, like last week, we visited how many states are going to be opening. A lot of states are phase 1, some are going to the phase 2, but the numbers are different. I think we still haven't seen the worst because the numbers we are seeing, even for the earnings, they're mainly from, like, let's say, the first two and a half months were without the COVID virus effect. So the numbers are still not fully digested. And this is the reason I want to talk more about like the crypto emotional quotient and all the things and what I see the future. There's this question we talk about millennials, baby boomers, and I thought if just a little information, you can have it. Again, you will have a copy of these slides. How do we define our greatest generation, the silent, and of course baby boomers are a lot in the conversation now. This is right after World War II. People started having babies, and basically, if you're between age of 56 to 74, you're considered a baby boomer. And your behavior dictates a big part of our economy. Then we come to millennials. That's a lot in the subject. Now, these millennials are between age 26 and 40. Some of these millennials are called, they're lazy, they're living with their parents. But also, I mentioned last week, they've gone through a lot. I mean, during the childhood of these millennials, you had the internet bubble. Then we had the financial chaos, the crisis. Now we have COVID. And these are like their peak times. I mean, these are their working years. Some of them are maybe just graduated from college. So basically, the millennials are getting a big blunt of this economic distress. And I think that's one of the reasons I think that the cryptocurrency is going to be here, because of their lack of trust to central government. They're thinking that the solutions are not there. They are the ones who find that as far as the word of trust is out the window. Some of them probably angry because they're not seeing what they thought it's due. So there is this feeling here, and that's what I think it puts things in perspective, what's going on. And I go back to the generation, the silent generation. Those are the ones that our greatest generation who went through the World War I and World War II. Our silent generation see the Great Depression, and as a child, these two generations, they had the scars for a long time to come. Now, how that translates is I just thought this was interesting, the annual births in the United States. This goes up to 2010, but you could see that's what's called baby boomers, and that's what dictated the whole economy cycles. And then we had this baby bust boom, and then this was the time of obviously we had the Vietnam War and the distrust and other things. So the fertility rate really went down. So it was like really no movement. Then 1980s happened, there was movement, and now after financial crisis, this is what happened. We had the finance, you can see since 2008, 2010, it has calmed down. So every time there's some kind of a financial crisis, the fertility rate goes down. What that means is with all the technology, people are living longer, but supporting them is becoming more and more difficult. And because of that, the governments, I don't know how much longer they can just print the money to bring more social programs. And this is not just US, this is global event. Now, is there a light at the end of the tunnel? Now that I didn't mean to be doom and gloom, I truly believe if we go back from generations past, we are survivors. We are gonna come out of this because there's just so much entrepreneurship around the world. It's not, again, just United States. The world has globalized. There's tons of still dreams out there. So the entrepreneurship is going to be the way to go, and it's going to be lack of trust in the governments. And I think this is what the outcome will be in the long run. And as you can see, the new technology, it's been, and there's going to be more. So that's what's going to displace the loss. But I think it's going to be a bright future for us because of that. But that doesn't discount what's going on now. I also thought just to give you a little about the energy, this is just for your information. Still oil as of 2019 represented 36.6% of the energy sector. As you could see, the coal is becoming less and less valid. And then basically just for your information, how the future of energy. Let's talk about the markets. And there is a kind of a disconnect between, and that was one of the questions that I'm answering now, between Wall Street and Main Street. I mean, you talk to an average person, the question is, Friday, the unemployment numbers came, was at 20.5 million. The worst we've ever had. We've never seen. It's like a Great Depression. And the market's actually rallying. Basically, most of the rally came overseas, but then they still continued going up. Now, you would think that 20.5 million people, which took the unemployment number to 14.7%, which is not really the true figure. They adjusted the previous numbers. In reality, should have been 19.7%. It doesn't count students who have given up, or some are retired people, even self-employed, but who are kind of displaced. They're not looking for employment. So really, rather than 14.7, you could be closer to 22.7. So how could you have a number like that and have the markets going up? And there's the disconnection, the divorce, in a sense that the markets are looking at a perfect scenario. The three things there are really, and it goes back to that word of the week, I would say the confirmation bias. They're saying, wait a minute, central banks and government, Fed, they got our back. Good, they got this free money. There's people who are on unemployment that are making more money than when they were employed. On the other hand, a lot of bureaucracy is happening. Some of them are not even getting their money. But the market is saying, oh no, okay, the Fed got our back. There is light at the end of the tunnel with the drugs and medication. The states are opening, although nothing has happened. I mean, I know in Texas, for instance, the malls were open. I think 2 people went to the restaurant, and somebody was joking that the customer was the owner and his wife. But anyway, these are the things. So still, we don't know what's happening. So that was, again, the positiveness, thinking, okay, the states are open. And then the news was with the trade deal with China. And they said the first phase, again, they're talking, Munchin is there and saying hello. So market is looking at, by the third quarter, everything is going to be good. We're going to go back the way it is. And the leading markets have been the NASDAQ 100, which is really technology. 62% is technology. And I wanted to show you why now you can maybe understand why the NASDAQ 100 is leading the markets. We are actually in the positive now, year to date, because Microsoft, Apple, Amazon, Facebook, Google, and then you have Intel, Netflix, NVIDIA, and PepsiCo is only 1.2%. About 52.5% of this market is all these big, large cap growth technologies. Now, you being home, obviously using the technology more than ever. So now that's where, again, the disconnect in some ways from the manufacturing and service goes to technology. So this probably explains when you wake up in the morning, you see, oh my God, Apple is still up, Amazon's going up, Facebook is up, Microsoft, my God, is positive for the year. So that's the reason the index goes up. And that's why you can see this is the NASDAQ 100. You can see a nice trend since we had that breakdown. This is what's gonna, what is happening as far as the market itself. And that's why we went up. But then I want to see the next few slides. I want you to bear with me. See a common theme. This is the S&P 500, which is the top 500 companies. Last week, in our analogy of majority of the markets, I mentioned I'm in neutral because we had a good support and we had a resistance coming up. And basically, let's go back and see, this is where we were about a month ago, right around here. And this is where we are now. And I'm just gonna go quickly. This is the New York Stock Exchange. New York Stock Exchange Composite, which is all the listed stocks in New York Stock Exchange. Let me do the same thing here where we were a month ago, and this is where we are. Let's take a look at transportation, which is again, there's a good, the dot theory from 1913 to 1918. There's a, Charles Dow had a theory that transportation leads the, because they are the blood of economy, they lead the markets. Just again, this is where we were a month ago. This is where we are today. By the way, as I'm showing you, I want to look at the volume for all of these. So let me go back. This is the volume. So when it's gray, that means up volume. That means the market was up. So this is a buying pressure. And then when it's red, it's the selling pressure. So this is S&P. The market was up nicely. We were up 1.69%. You look at the market, low volume. NASDAQ, the same thing. Transportation, the same thing. Look at the dollar. Dollar is just as the index. It's not, it's just a cash settlement. So here, we actually, again, it's kind of a trading. We are lower now, but you can see it like a rectangle. So we haven't gone anywhere in past month. Gold. Let me go back here. I don't know if you can see, this is, we call it channeling. It's like a rectangle. So gold hasn't gone. This is the bond market, TLT. I just used the ETF for it. This is May 10th, or I mean April, exactly a month ago. This is where we are now. And then this is where that the exchange traded fund, the corporate, that if you recall here, the Fed came and said using the Treasury, they're going to buy investment graded bonds. And that's what you have this huge volume, because the central banks are actually buying. If you would have asked me 3 or 4 years ago, 2 years ago, I would have never thought that a central bank in the United States will actually get involved buying securities and bonds. But here we are. But they had to do this because, as you can see, the high yield, which was the lower grade bonds, which is again the same time, they were getting hurt. So that's where the government intervened, central banks intervened. So why am I showing you this? There's two things. Number one, there's a pent-up energy. You can see if nothing has happened in past month really, except, again, the only, there's a Russell 2000, I didn't show that, but the small caps. And you can see this is nicely, you can see the technology has been going up nicely. So if you own technology, you've done well, especially, I mean, big five, really. I mean, forget about all the technology. I just want to show you that five. So that has done well. Other than that, there's something going on. There's two things. Number one, people, I have talked to my portfolio manager friends. Believe it or not, the professionals are not, they're not really buying a lot. And that's where the volume is, you can see low. They're on a neutral because they don't, there's a lot of uncertainty. So it seems like this market is being moved by actually retail investors like you and I. And I think I have my own theory. I believe the reason is, if some of you are old enough to remember when 2009 happened, when the market was at 666 on S&P on March 9 and 10, a lot of retail investors, they just didn't believe it. They waited and waited. They said, no, this is not real. While like Warren Buffett had started buying months before that, if you recall, a lot of hedge fund managers were buying. I remember David Tepper came on CNBC. He said, I'm buying. So the big managers were buying. Retailers, they waited 2 or 3 years. So really, most of retail investors, they did not get a chunk of the return that the portfolio managers or indexes did. The performance, as a matter of fact, I'll give you one thing. From December 31st, 1999, to December 31st, 2018. I don't have the 2019 in there. The average retail investor, his portfolio return was 1.69% a year. For 20 years, that's what he averaged. real estate and gold. Gold was the best. REITs actually were number one, and gold was up 7.6. S&P was up 5.6. So retail investors are the last ones to sell and the last ones to get in. So this is, again, my theory. I think just watching these volumes, I think there's something is going on. There is a pent-up energy. I don't know if it's going to go up or down, but we are really, for past month, we haven't done anything. And this applies to multi-assets. It's gold, it's dollar, it's bonds, and the stock market. So I don't know, either way, when it happens, it's going to move really fast. So that's just, again, my theory based on just looking at these charts. I also am looking at the value versus what has happened with the growth. Now, I think one session we will discuss the value of investing has completely changed from old times when we used the 1990s, when we had internet bubble and 2000. The value has changed, the definition of value. But usually we looked at the low book values of price to book, price to sales. Things are different now. And I will explain that in another hopefully gathering. But this is where we stand. Just bear with me again. April 10th, May 10th. So if you would have come and skipped the town, you stayed at home, watched Netflix, you said, oh, Ramin, I put a lot of money in your VTV, Vanguard ETF. I said, oh, I hear the markets have done really good. A month later, you'll be sitting at the exact same price. So the biggest thing was this was the oversold rally we had a little correction. And then since then, really, nothing much has happened. On the other hand, you can see this is very similar. This is the Vanguard Growth Fund, very similar to what NASDAQ 100. It has broken over its 200, 20-day and 50-day. So, but again, let's look at this, the volume. So I usually look at the relative ratio of the growth to value. You can see the growth and value have the growth since beginning of 2020. I mean, the whole last 10 years, growth is the place to be. I mean, you look at some of the best performers, and when you think of Amazons of the world, you can think of the Apples and Googles of the world, Netflix, and this is where it is. We have a little dip here, but still, it's going on. Okay. So let me, let's talk about some questions that might help you. I mentioned about Wall Street and Main Street. So it seems like the people who are working unemployed, I don't think they've seen the reality yet. Even with what's going to happen with opening restaurants, flying, I don't know how many people will still fly. I mean, there is 2 more years, maybe a year. But one thing I know for sure, our behavior does change and we are adaptable. So eventually we're going to be in a new world. So we'll see how that will go. But based on history, things, and we do go to the mean, reversion to the mean is called, because of we overreact sometimes, and then we just, go back to where the norm was. And that's what I think, again, with unemployment, I just spoke about 20.5 million. The markets were happy because there was supposed to be 22 million. So, I mean, it's almost like I broke my leg and my knee, but I didn't break my hip. I mean, it's just, it's how you look at it, basically. So there's a question, let's say you're all in cash. So if you came to me today and said, Ramin, I've been in cash since this happened. I got 100,000, 200,000, or whatever. But that's my retirement money is in cash. That might be even better. What would you suggest? Now, number one, actually, the way my outlook is for the next few months, I mean, being cash is not a bad place to be, because I think there's going to be some opportunities. Right now, you look at the markets, as I said, there's a few horses are pulling the whole wagon. There's a lot of them still. When you look at industries from hotel to leisure, we look at Las Vegas, for instance. We look at basically from the restaurants to even transportation, trucking. All of those. These are the signs that as I said, the scars are not going to go away. So as much as I'm happy, I never thought that I would be happy when central banks flood the money. Well, they had to do what they had to do. And I mentioned this is the election year. If it was an election year, things would have been different. Who knows what would have happened? But my problem with the way the economy is I go back to the, I feel sometimes organically there is a need for cleansing. And basically I've used this example before, when there are 10 youth teams, they have teams that some of the players, they work hard, they practice 3 or 4 hours a day, they go score all the goals, and one kid never shows up to the practice. The kid goes and, does all the other things, watches TV, comes back, plays 5 minutes and gets injured, goes, sits down, and then everybody gets a trophy. And that's not, there should be a little healthy competition the right way. So I think everyone should get a chance, definitely. But when the government comes and randomly saves everything, then you basically feeding the bad behavior, in my opinion. So going back to the cash, let's say I have $100,000. I would propose, number one, cash is still good because there's going to be some opportunities, and that's what this is not really stock markets. This is a market of stocks. So basically, you have to be selective. There are still opportunities, and I will give you some ideas at the end. Not stocks, I don't want to, but I will offer some themes that you could use. So let's say you do this. Let's say you have 100,000. Based on money management, I just suggested maybe you can take $10,000 and start using 4 or 5 different themes, or start gradually, or just use that to start work with that $10,000 and just manage your trade. I mean, this is a good time, really. It's education. It's like either playing soccer or swimming. I mean, you're really in the water. And nowadays, because of there's no commissions, it's a lot easier to set up accounts. That would be one suggestion. So now you have your risk management. 90,000 is in cash. $10,000 you can work with. You can trade at least 50 different trades in the meantime, losing everything. And 10,000 represents 10% of your money. But there is that emotional reward, in my opinion, because when you learn something, it stays with you forever. Whether it's a failure, which is a better lesson than success, in my opinion. If you learn that, your behavior will be refined. And I think this way, emotionally, you're still connected. When you're completely in cash, you're basically very much disconnected from the markets. Basically, what you want to do, you just pray. You say, God, I hope everything goes down just for one day so I can get in. So in reality, your energy is in a negative side of yourself. So it's like a negative energy. You're just praying things crash. The problem with crashes are that you don't know if that's really a bottom. I mean, if it's a crash, what doesn't guarantee us that things could get even worse? So this is a good time to be gradually maybe get in. I mean, have a portion of your investments. Or the other suggestion I would make, and rather than just being all in cash, is waiting for opportunities, is maybe gradually, like once a week, choose again a few teams and put 1% of your money to work. So this week I put $1,000, next week another 1,000, next week another 1,000. I gradually get in, it's like a dollar cost average. every week, just so it will take you 100 weeks, but then it allows you, if there was 5 months or 4 months or 6 months down the road, now if the markets are really down, then you can put 25, 30, 40,000%. The other suggestion is don't go just by one theme. Basically try to do different themes. That's one of the reasons I like to do these webinars. I like to introduce to, let's say, to oil, to Reebok gas, to Bitcoin, to gold. We talked about currencies, for instance, if you want to do a little, there's just so many different things you can have. So even if you don't want to do stocks, you don't want to do mutual funds, maybe do exchange traded funds. Have a portion of your money, put it in coffee. I don't know. I mean, you just choose. Or if you want to do stocks, why don't you buy like one share of your favorite? As I have mentioned, like do dollar cost average to Berkshire Hathaway, just for the annual meeting, which was incidentally last Saturday. It lasted till 9:30 or so. So, and they had the Zoom. Unfortunately, Charles Munger wasn't. I don't believe he was on, which I respect a lot. I mean, Charles Munger is really the brains, and very enjoyable to listen to. So those are my 3 things. So either do gradually in, choose a portion of your money and be active with it, be a trader, or just stay in cash and wait for, as long as you accept the fact that you're patient. One thing as a trader, I have to tell you, and this is very important, it goes back to the emotional quotient, the psychology. Trading is not supposed to be entertainment or excitement. I enjoy it. I mean, I look like 5 in the morning, I'm ready to go. I just enjoy it, but I'm not out there. If I don't do a trade, I'm not disappointed, because patience is the most important thing in trading and then investing. But trading, especially if you're doing short-term traders, patience is crucial. You have to find the right setup and you have to admit your mistake. So once you do that, you will be pretty successful. And that brings me, my third question is like, so what to do with the profits if you're a trader? Let's say you had a really good month last month, and you said, my God, I had a $20,000 or $10,000 account, I'm up a few $1,000s. This goes back to, again, that emotional quotient, to your psychology. Who are you? Because I've known people, I've had friends who've taken, I met a guy in Chicago. He had taken a $10,000 account in 11 months, taken it to 1.3 million, trading futures, lost it all, did it again, took it to 2 million, lost it all to back to 10,000. And he repeated that, he said 3 times. And come to find out, this goes back to, again, he didn't feel he deserved it, or his father had told him that, you know, money's evil, or something like that. It was just, he didn't know. I mean, he had to go to a psychologist and all these things. He still never found out. But that was one of the things we know, we have these hang-ups. So one thing as a trader I found out, I like the challenge. This is up to you what you want to do. But if you have a trading account and you know you like the challenge, every quarter, every month, whatever your goal is, and if you know you're the type of person that at 100,000, once it hits the million, then you lose money. If you made that profit, take that money and put it in a different account. Could be cash, could be real estate, could be gold, buy something completely different. So you start from scratch. This just gives you, this is just an idea. I mean, I've tried it, it works. And if you can do that, you always feel that basically there's that challenge. Now, if you're a trader and you're a day trader, then you want to have a $25,000 capital minimum, because then you are not, you're abiding by the day trading rules. So after 25,000, you can buy and sell unlimited. Unfortunately, if you have under 25,000, then you can do 3 trades. That means buying and then selling the same week. So you have to be a little careful with that. So if you want to start a trading account, start with 25,000 if you're going to be active trader. I hope these are helpful, by the way. I always want to share with you the trade of the week. If you're interested, please give me a feedback. I can elaborate on it. I usually go over it just quickly, just tell you what I did. These are real things. So I had a trade last week on S&P on Monday, and what happened was there was toward the end of after the overnight overseas, I thought the markets are really overheated, so I bought 24 put options on S&P 290. So it's just, so this is where I bought, and then I added a little more here, and then I again, I have my targets, I have the discipline, I know exactly, don't want to be greedy. I want to make sure that I can sleep at night. So basically what I did, I already have my targets preset. So when I bought these, I had 75% of my targets were already set. So while I was like sleeping, they were actually getting hit. So, and then the following day, I don't have it here, the following day we started really high, and then, so I bought it around $3.60 average, and I sold them from 440 to 625, basically. So it wasn't bad, it went between 20 and 45, 50% return. And the reason I did that, again, you can see this was, I had seen the overnight, so this is S&P. It really wasn't doing anything, and I thought this, the following day things are going to reverse. And what you could see is my timing was pretty good, because right on the opening, I think it was a Tuesday, that the markets really dropped. After that, as you know, the end of the week, everything was up, so I would have lost everything, really, almost. So basically, my timing was good because I had the targets. They basically they met my objective. So the reason I want to show this, it's not that I made money or not, is like you have to have a plan. You have a plan, and you trade your plan. So you plan your trade, and then trade that plan that you made. So you have to have a clear goal. The markets could have dropped all the way here, and if I was out of it, I would have been comfortable with it, because I followed my rules. And basically, whether I made $2 or $200 or $2,000, I knew that I had this predetermined plan, and that's what it was. And I didn't play on hope. I said, oh, you know what, that justifying things and saying that, you know what, the unemployment numbers are going to come on Friday. Everybody knows it's horrendous. So why not wait till Friday? Well, I didn't want to wait till Friday. It was the trade was given to me. That was my plan, and I'm out of it. So I hope this is helpful. We will do a little more. If there's interest, I will do like exactly what setup I use. Maybe take a picture of that. Maybe spend 10 minutes. I just don't want to come and show you, oh, you know, it was a good week. I had a bad trade like 2 or 3 weeks ago on USO, for instance, for oil. But my losses are very, very limited. So I'm so happy, because it would have been huge. It happened before, you know, all the debacle. So, all right, we got about 10, 15 minutes. So let's talk about the technical indicator of the week. So every week I want to introduce you to something that it has been useful for me. It has been, again, profitable and easy to understand, at least in my opinion. You don't need hundreds of indicators. I'm introducing you to a few of them. I mentioned stochastics, which are momentum. We talked about Keltner channels, which are the ATR. This week I want to introduce you to Ichimoku clouds. And this is something the last couple of years, I've been using it for 6 or 7 years, but last couple of years, it's like you find a lot more information. When I started, there wasn't many information. There was very few places had this indicator, but now on stock charts, you can have it in Thinkorswim, TradeStation. It is wonderful. So, I mean, I could do a class on this alone because I think it's such an interesting concept. Little history as usual. I like history. So actually Ichimoku clouds, it was developed in late 1930s by Goichi Hosada, and he was a journalist. He had studied the markets, loved the candlesticks. He had gone in the past and looked at all the traditional classical. But he said, you know, these are all in the past. What can I do to predict what's going to happen in the future? There was no indicator that predicted the future. Now, there's another indicator that Fibonacci they have seen I've used. We have Fibonacci Extension, which they give you the targets, and another class we will do that. But this, he said, I'm gonna try this. And for 30 years, he tried it, and finally, it was ready to come public in late 1960s. Now, interesting thing is, the reason Ichimoku, when you call it Ichimoku Sanjin, is of what a man in the mountain sees. So that's what he sees. He wants to see the future. If he's up there, you want to see what's going to happen next. And that's what this, this indicator does. It's different than moving averages, so don't mix it up with moving average. So basically what he does, he goes back 9 periods and looks at the highest and lowest and then divides by 2, and then he draws. Then he uses 26, which is more of intermediate. I have color coded here so you can understand a little better. So Tenkan-sen is the short indicator, short-term line, and then Kijun-sen, and then there's a 52-day line. So, but these are the 9 and 26 days periods are what he uses. So how the indicator works, I'm going to show you on the chart, so it's a little easier. The Tenkan-sen is short-term, and the Kijun-sen, if they're above the cloud, you will see there's a cloud, and if they're above that, that's positive. If they're decidedly below the cloud, then the trend is negative. So what you do, you want to make sure, usually prices when they're above the cloud and that the angle is up, that means the trend is up, is positive, so that's when you buy. When the price is down, usually that means that it's not a good time to buy. So a buy signal is when the short term, the Tenkan-sen, and the Tenkan-sen moves above the Kijun-sen, which is the short term goes above long term. And it happens a lot. In the moving averages, you do the same thing. If this 20-day goes over 50-day, that means there's more movement near future is higher than the past. So that means there's a potential buying power is coming. So the sell signal is the opposite if the short term goes under. All right, with that in mind, let's look at this. A few weeks ago, if you recall, I think we were talking about, I mentioned the ETF of Cloud. And Cloud, see, it's an exchange traded fund which really invests in a clouding technology, all the stocks which are involved with this. So you don't have to go buy 20 stocks. This does it for you. And I bought that stock right around here on March 23rd. And I think the of you bought it with me. So at that time, well, it was a long, but it was more of a hunch. But these are clouds. So the clouds, when it's above it, it's a resistance. So this, because we are above this red cloud, is support. That means and then this is because I color coded, so you can see the blue and the red, and this is the Sinjin and Kijun. So this is a short term, the 9-day. So as you can see, from this day on, actually here, if you notice, we broke above this 9-day. We came and kissed it back. It happens a lot in moving average. We kiss it and then we went back. So this is really your confirmation. And then it has been staying above this line. If you want to put support, it's right here. Now, this is more of a positive thing. So you know, still it can come down to 1627 and you still have room to move up. So these are really your support zones. This was your resistance. So once you break above this cloud, I usually use 2 candles. Once you break it, that's confirmation you're in positive. You could have bought it at 1650. So right here. The narrower the cloud is, the weaker the resistance. So you can see easily we broke. The thicker the cloud, the heavier the resistance. It's almost like, so let's say you go through water, and then here is like a very sticky oil or whatever. I mean, once you come down, you're gonna bounce back because this is a heavy cloud. So I don't know if it makes sense, but just, again, these are not supposed to be a 5-minute presentation so you can understand, but I'm just opening the door, you can study it. There's a confirmation, you can use it on a daily, I can use it on a weekly. This is Microsoft. You can see how nicely we went over the cloud. So I wouldn't sell it here because we're still above the cloud and we're still above the Kinjun, the red one. So that continued. So this gives you, again, giving you the idea that, listen, we have strength. Now, Peloton is a theme, got a few themes. With all the exercise machine at home, you're not going anywhere. I hear Gold Gym is filing for bankruptcy, a lot of fitness places. So here we are. This is Peloton. They had great earnings. Of course, they're correcting a little bit, but they were at 18. They hit 45. So just again above the red line. This is an interesting one. The UGA I mentioned. So here we are. You can see there's the battle between the 9 and 26 days, and we finally broke above that, like at around 12. And then we went, and now we are inside the cloud. So this is a neutral zone, but now you're having support. So if you bought it around here, this has room to go. And usually, again, although it's thick, there's going to be, but it has broken above the 50-day. So basically, this tells you it's like neutral to positive right now. Once it breaks above this, if you have 2 candles at above $20, then you basically have a big chance of this moving to $26 and eventually to $30. But still, I mean, it's making a nice move from, again, it was, I think we bought at 950 and it's at 1530. Okay. All right, last 2, I know we're getting close to 3:30. Some ideas for these environments. So I made this, if you go back to slides, so if you don't want to choose stocks, you say, God, there's a lot and I don't know. The problem with stocks is it could be completely non-related to earnings, could be non-related to the markets. All of a sudden, the CEO says something, goes through divorce. The FBI comes and looks at the books. I mean, it's like there is so many variabilities that that's why like people always like mutual funds, for instance. But exchange traded funds allow you to go with a theme. So I had mentioned, again, about a month ago, I suggested in a cloud, which was goes invest in all the clouding. So cloud companies. Hero was all the kids being at home. They want to play their games, Xbox of the world, and they want to play EA Sports and interactive, the games and all that. So Hero was for the gaming. Sensor was for the Internet of Things. AIQ was, again, more of it was more of artificial intelligence. This WFH has not come out yet. It's in the works. It's like working from home. That's what it stands. I added PAVE because with all that money, if the government was smart, they would do as far as stimulating the economy by the infrastructure, building bridges and the grids and other things. So this was a theme. Hasn't done well. These have done pretty well because they are all COVID related. This one is more of economy related, but I feel whether you have a Republican or a Democratic president, in order to get the people back to work, that's what they will do. And that brings me to a, FDR, President Roosevelt, the only president who got elected 4 times. He did a lot of good things, but a lot of things could have been avoided. There was in 1933 to 1935, it was tough times, and government did everything they could do, including, they came and confiscated people's gold. They said you cannot have gold, for instance. So that was one of the things that the government, what they can do. And it goes back to cryptocurrency, right? So when you don't know who has it, you cannot confiscate it. But they confiscated the gold. You could not have the gold. But also that's been the Social Security, a lot of the stimulus package. But a lot of bad things also happened. And I think the government's interference, it actually made the second depression or recession after that, 1936 to 19, well, I mean, if it wasn't World War II, really, that was a catalyst, in my opinion. Things completely kind of stimulated in a bad way, actually. I mean, for bad reason. We don't want to have wars. So basically, that's what the governments, to answer you for today, sometimes they mean well, they try to do that, but sometimes the medicine is worse than the actual problem. So that's a food for thought. The last thing I want to leave you with, for again, if you want to use $10,000 of your account, let's say out of 100 or 200, I want to show you some theme sectors, which could be completely unrelated to the markets, right? Although when bad things happen, 95% of time takes everything. But let's say you want to have 5 themes, and if you want to invest in Bitcoin, there is no really ETF for Bitcoin right now. There's a trust fund, it's like called GPTC. You can go on stock charts, look at the chart of this, and you can invest in GBTC. It's like if you have equity account. If you're interested in marijuana, then there's a fund called MJ. There's a few funds, but this is the biggest one. There's a lot of talk about 5G, especially again with the COVID-19. There's a fund, 5G. Robots and artificial intelligence, there's bots. The volume is pretty low, but it's a theme. If you feel comfortable with that, it's a good investment for the future. And then AI is artificial intelligence. This one is AIIQ. So with that in mind, I hope these are useful and helpful information. Again, I hope I leave you with some soul searching. That's what I'm trying to do. An hour and a half is very short. I'm hoping we will have like set up our YouTube channel that goes through each one of these in detail. So this is just like an appetizer. Don't want to use it as a teaser. It's just, I just want to give you as much information in the 90 minutes that I got as possible, and hopefully intrigue you to become curious, because what you do on your own is much, much, much more productive than what I can teach you. You can, if you get this and do things on your own, you will learn a lot faster. So with that in mind, I think we are good, open for conversation and questions and basically comments. I'm ready, Sean. Okay, you can unmute if you.
Yep. So it's unmuted.
Great. Any questions? Any comments? Any?
Ravine, this
yes.
is Chris.
Hi,
and,
Chris.
On the SPY trend that you had kind of a spray spread that you were using, what was that? When,
Oh,
you,
which,
when you're showing us your trade of the week,
oh,
SPY,
correct. So what I did, you mean this
I
one?
don't know what it is. That, yeah. What is
That's
that?
so good question. So what I did, I understand you got the trade station, right, Chris? You got the,
I
have you used
used Thinkorswim.
Thinkorswim? Okay. So what I did, so I overlaid two charts in one. So this is a chart of SPY. So this is one. You could have 4 charts in one place. I could have 12 charts. So rather than having this chart and then give you the next, go to the next slide and show you this, I just kind of overlaid them. So this is the SPY in the 30 seconds intervals. So every candle is for 30 seconds. So this was done again. And then I showed you what was my put trade, put option. So these are 2 separate charts, really. I just overlaid them so you can see when it hit this bottom, that's when I sold. When it hit this bottom, I sold. So basically, I just want to tell you my reasoning why I was putting these trades. But again, remember, options are the derivative of stock. In this case, this is the SPY option using the SPY as my underlying holding. So
Okay,
is
it
that
almost
clear?
looked like a, yeah.
No, they're 2 charts, really. I married them, basically.
Okay.
Thank
You.
Thank you. Thanks. Good question. All right.
I can ask one more.
Sure. You're on. Go ahead.
Do you ever use stop losses or trailing stop losses and for longer term?
Oh, longer. So that's a very good question. That's why I want to show you again the money management side of it. I think we will do one. Again, that's one of my things that how do I, again, getting in is easy. Getting out is difficult because now you got all the psychological stories come to you because you're not sure if it's going to go up again, if it's going to go down, where do I get out? So I mentioned once you want to have, there is a fundamental reason. Let's say the earning came bad or the sales were not good. That's fundamental reasons. There's a technical reasons, which is could be moving averages, could be support and resistance, stochastics. There's a sentimental reasons. Obviously, you can see, look at the markets. And then there's a predetermined, you use your own psychology. You want to use either actual amount, percentage-wise, like Investor Business Daily uses 8%, or a certain amount. You say, well, if it goes more than $2 down, I'm out of this. The problem is sticking with it, and that's the problem, and that's what goes to the psychology of things. So yes, I mean, we should have one class based on that. And but I do use, because I'm pretty active, my stop losses sometimes I am discretionary, but a lot of times, yes, I do put a stop loss, especially when I do options. I always have my targets ready. I know where I'm going to get out. And with options, you can also do something called, which is dependent on the stock. So if a stock goes under the moving average, then your option, you can sell it. So that there is, criteria that you could use depending on your stock. But yes, I do use on the futures, definitely. Futures, because again, short term, I use, a lot of time I use stops, but also use trailing stops. Because sometimes the markets we had a few weeks ago, they just moved so fast that I don't want to lose my profits. So I use my trailing stop, which moves my, so basically just to explain for everyone, the trailing stop is a fixed place. So let's say I bought it at 10, I say sell it at $9. The trailing stop, because let's say I'm not watching the markets, the trailing stops moves with my account. So let's say I bought it at 10, I put at 9, which means that $1 loss. Now I say just move it. I still want to have $1. So if my stock is at 13, my stock is at 12, my 12. So that stop is moving. That's called trailing stop. So even though if it goes down over $1, I get out at 12, but I still made a good profit. Went from 10 to 12. That's not bad at all. But that's called trailing stop. So basically, it moves with my
And
whatever.
what are the option stops that go with the moving averages? What are
No,
they?
so basically what it does, you do have, I'm not sure, yeah, Thinkorswim, what it's called. There's an OC, so it's a conditional, let's call it, I think it's OCO. So when you go put the stop loss on your, when you're putting your limits, you use the abbreviation. So that means it's a conditional on. So I believe it's OCO, if I'm not mistaken. So it's conditioned on the stock, and then you decide.
OCO bracket. Yeah.
I believe so. I think
Yeah.
that's what it is.
Oh, okay.
Yeah.
Okay.
So,
I didn't ever look at that.
yeah, no, I mean, it takes time, Chris, but those are good if you, especially, you don't want to have just a pure target profits, and you want to be conditional. You bought some stock and you think this is a great run, then
Interesting.
you can use technical
Okay.
analysis.
I'll study. Thank you.
Of course. Okay. Any other questions? Anyone?
So, Ramin, I want to follow up with Chris' question on this
Yes.
option trade.
Yes.
You bought the put trade of 290. At that
Correct.
time, it's actually out of money. Why don't you buy in the money one?
Good question. So basically what I did, I usually like to be in the money, but I was looking at, so there's different factors I use. I look at the delta, but I also look at the spread and how much volume and open interest. 290 for the week, this is the weekly one. The 290 was the most liquid. That meant that the market really wanted to pin it at 290 by Friday. So that was the objective of that. So there was so much liquidity, and basically that's the reason I chose that. For a longer term, I would suggest to look at obviously the theta, and you look at the delta. I usually like just for you that invest in options, and especially if it's more than 30 days, I would like to use delta 70, and usually in the money. So delta 70 in the money, and you definitely want to have like 45 days. Other than that, then if it's out of money, then usually the chances are, that not that much, unless, again, depends on how much volume and open interest they are. But no, that's a very good question. But I was looking at, there was two criteria. This is a problem, Sean, that it was more of a gut feeling as well. I had seen this story before. I looked at the overseas, what was the reasons, what was going on. It was overnight trade. So that's when when in the morning I saw that, I said, this is what I'm going to buy this put option. And that was the best buck for my money, basically. So.
Okay, thank you.
Good question. Yeah, next time I have to put my journal and write down exactly why I did it. So. Any other questions? Comments? Do you let me ask everyone, is this something, the pattern? I mean, well, last few weeks, some of you become more confident, familiar with what's going on. Is this okay to do it this way, or should I spend more time on one subject? I don't know. I mean, these are just exploration time. So I would appreciate any comments privately or publicly. I appreciate it. So.
Ramin,
yes, Henry.
For me, whatever you decide to do, whatever information you decide to share with us is wonderful.
Oh, okay. Thank you, Henry.
Greatly appreciated.
All right. Okay.
I was just wondering, probably we don't have to do it now, but maybe at some point we could just have more like a general discussion and share different, maybe different trading ideas or strategies.
Okay, you mean as a community, or you want me to do it? I mean, you want everyone
Well,
share, use
well,
somebody else's?
for example, I might have some ideas, but because I'm still learning, they might be naive or maybe.
Gotcha. No,
I
that's a
might.
good, Henry, I think that would be a good, maybe have like another time with a discussion. So have like a community, everyone, we can do it that way. It's like an open session, right?
Well,
So that,
Well, I mean, I have, like I said, I really appreciate your time and I really don't want to ask for more of it. But,
okay,
if other people want to have some time, to have
right.
something
No,
like
that would
that,
be
or
great. One, I think the reason I say another time, because I really appreciate, I mean, an hour and a half of 90 minutes is a long time. I mean, just having your patience, especially again, being in the UK, it's almost midnight. I don't know how you stay up, but anyway, and this is not a, John. Oh, yeah.
There was one comment I was going to make when you did those Ishimoto clouds, if I'm correct, and you said on the basis then that you brought some things on the 23rd of March. That was also the base or the bottom of the FTSE 100 in London that day. It then began to rise after
Right.
that.
John.
So it's much, he works in London as well.
No, I think, no, what happened was, John, that was more of a gut feeling. It was more of a really oversold time. And that's what the experience, I mean, I ended up buying tons on that day. It's just, I have gone through that, but you're right. I mean, globally, it was that's when everything hit. And no, I appreciate that. Yes. And Ichimoku is just indicator, right? So it kind of just, we're trying to give you tools and maybe flashlight, and then you got the wrench, and the more you have in your disposal, the easier things get. But also you don't want to be overwhelmed, because then you end up not being able to carry all those tools and end up not having any tools. So you just want to do 5 or 6. And but going back again to Henry's, it's like, I am kind of also concerned about your time. Again, 90 minutes. This is not a, this is kind of a dry subject. I appreciate you being here, but unless you have, you're in the game, sometimes it's hard. But I'm hoping it makes it a little more entertaining, and more than 90 minutes, I think, is the limit everyone usually has. So I think, Henry, we will do maybe another, we will decide, even we could do a community, even if I can be observant, and whoever wants to choose, you can set up a time and then just do it. And then I think it's a wonderful idea. It would be our own community, really, and share ideas. And also, we learn a lot more from mistakes. And next time I will do like the mistake that I made, so it will be even better. So thank you, Henry. Thank you, John, for the comment. I appreciate it.
That was fascinating.
I appreciate it.
I enjoy the emphasis on discipline. That was very impressive. Set your rules and keep to them.
Thank you.
Ramin, this is Hamad. I just wanted to share that, and I'm just speaking for myself. Others may or may not share the same opinion, but for me, 90 minutes just fly by. I can sit in the session for hours. I mean, if it continues like that, it's a lot of very, very good information.
Oh, thank you, Hamad. I think the best thing will be, and I have to talk to Sean, is these are just the glances, but if he can do a structured, like have like instructional videos. I mean, Sean has seen my material. I guess I talked to Sean one time, like 3 months ago, and in a matter of an hour, we came with like 30 different ideas. It's like, I just talk, and he goes, I mean, we can do it. So if you do like an hour video or 3 hour, I mean, it's on your discretion. Because like Ichimoku alone, there's just so many ways you can use it. I use on a 10-minute, 30-minute, 60-minute. I do it on weekly, monthly, because it gives me in one place, it gives me a picture of everything. So if I can share that with you, I think saves so much time as far as, you know, getting in and getting out. It's just a one, and then Fibonacci, there's just so much information. So, but I appreciate your kindness, Hamad.
I was just going to follow up on the same, that, you know, when you touch these technical indicators and start talking about markets, it becomes extremely informative. And there are so many questions that come up even to understand one thing, because you can read these things incorrectly. I've done that multiple times, and, you know, without really understanding them well. So
no, I really appreciate, because I think, you know, there's that a lot of you are into soccer, but the thing is that 10,000 hours, you know, the concept of that, if you did the same thing 10,000 hours, you become expert. I mean, if I shoot the soccer ball with my toe for 10,000 hours, that doesn't mean I become a good soccer player. So the problem is, it's just, I'm hoping to give the right direction so we practice it the right way. But if we don't, then there's, like you just said, it's like, even if it's the wrong way, regardless of how much you do it, it still doesn't become a skill. It's still a technique, but it's a wrong technique. So, but again, every week I like to just show some of the things that's worked for me. So these are everything I share with you. It's not like I threw a dart on the encyclopedia of investing and said, oh, today these are the things that have worked for me for years. And I like to share them with you. And again, it goes back to the emotional, your psychology. So much is in your heart and your gut, which is your second brain, than just your cortex. So anyway, appreciate that. So, all right, so we got about 10 minutes. If any other questions, anything, comments? Go.
If I can ask another question, Ramin.
Please.
Yep. So still on this, you know, example showing on your screen, I just wondering, you know, as I also trade, out of so many different, you know, stickers you can trade, and so many different entry points. What made you to, you know, select SPY and select to buy the put option at that specific time?
Correct. So one thing is, you want to make sure you work on just a few that you feel comfortable. So I could have used IWM or QQQ. So QQQ, for instance, NASDAQ is like, we looked at the relative strength, is the strongest. So I'm not really in the mood to short NASDAQ, right? So SPY is one of the most liquid ones. The patterns are pretty predictable. It was, again, I don't remember, I'm pretty patient, Sean. I look at, I have about 7 laptops. I look at different, I look at the currencies, and one day I like to share just one of my screens, what I look at like in the morning, what everything is under one screen. So I look at the relationships between all the asset classes, and if I get confirmation, and I am ready to go in. And when I do go in, I already have the preset targets because I know what I got in. So with Spider, I do a lot of my options are mainly on Spider. So I don't do diamonds or like Dow Jones. I do some IWM, but not a lot. So it all depends on your comfort zone. So for my options, I usually have 5 or 6 predetermined on indexes. So that's what I choose. Then I also, I'm like, for instance, I'm looking at the transportation, like the ETF is IYT. I see it's really lagging. So rather than going, selling, buying put option on American Airlines or United, maybe I just look at the transportation. If I'm gonna put options, I like to go on the weakest. So the technology, for instance, XLK, if I'm looking at the sectors, I see, oh my God, if I'm gonna buy call option, something like XLK will be a good one, but I have to make sure which one I'm choosing and how long is the time and what is my outlook. So to answer your question, you already past few weeks, you've got a feel about different stocks and different markets. You feel that you're better investing in Google or than Apple or Facebook or Amazon. You get this, the behavior is kind of, although they're similar, but some of them you feel just for you, it feels more comfortable. You see the options behave differently. So just pick one or two because they're kind of similar. Could be Disney, could be Boeing. I mean, Boeing is right now is in a lot in the news. Is this a value or is it like, my God, it's going to go down more? So choose a few and just practice with those for the next month or so. You don't have to know everything. I do know, I want to know about the asset classes because the relationship, like Japanese yen. I looked at like Canadian yen or Aussie yen. I look at the bond market. I look at the oil market, gold market. I look at the dollar. I look at the XLF, for instance. So I look at but that doesn't mean I constantly buying and selling them. I just look at the relationship, and if they're negative, then I go to SPY, for instance. SPY is my go-to for options most of the time. And I don't know if that's, is that more clear now, Sean, as far as, okay. All right.
Thank you.
Of course.
I mean, it would be great if you can just do one session on options because there's so much related to
Oh, there's a lot, I know. I will love, as I said, I have to start like class, because with options, I mentioned like last time you could do speculative, but hedging or income alone, there's just so many ways you can do this. So we can choose just how to choose your call option. And yeah, I agree. But I just want to make sure, Hamad, that this applies to everyone because we have a diverse group of audience. So I just use the initial, you know, just opening the door and then maybe specifically do a class on that one. So, I mean, these are great thoughts. I mean, Sean is making notes. I know I am. So mental notes. And we'll do, there's just so much out there. But we are in exciting times. Let's put it that way. So, and anyway, I'm not seeing, Sean, anything in the chat I have to look at or no? We are not, we are good. I don't even look at my chat, so.
Oh, we are good.
Okay, great. It's almost, yeah, a few more minutes. If not, if everyone is good, I really appreciate, again, you participating in this. It's, I mean, I really enjoy it. I really, I hope you find it informative, and I hope that you find it profitable too. So that's the key eventually, having profitable trades. So anyway, all right.
Thank you, Uncle.
Thank you.
Thank you so much. Thank you, everyone. Have a wonderful weekend. Thank you, Nadajan.
And wish Mari a happy Mother's Day for us.
Oh, wish you all of you happy Mother's Day. The good mothers. Thank you so much. Yes, I will.
Thank you so much.
Thank you. Bye.
Bye.
Goodbye.
Bye-bye.
Bye. 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 Bye.